This is Andrew from Trend Following Mentor. Today is January 27th, 2014. Before we start, here's a quick disclaimer. Plus, there's other disclaimers on the website of trendfollowingmentor.com that no material here constitutes any investment advice or to buy or sell any financial instrument. Basically, in this short little video, what I want to talk about is trading the news and also being aware of short squeezes. And really, what's very interesting over the weekend, I got all kinds of emails from viewers, clients, and just people that are in contact with me. And one of the ideas was to start shorting the stock market. And as much as I'm not giving any investment advice, I'm not. I mean, I trade commodities for a living. I have to trade stocks for a living. I have to manage money as a CTA, but I don't give any advice. But what I say to them is, I said, the fact is we only had a 4% decline. I mean, it's nothing. And, put things into perspective. And it was the same analogy as like when I actually do have a client whose money I manage, and I thank him, and probably he's watching this, that wanted to go short Netflix and asked me what I thought. And I said, well, I'm not giving you any advice, personal advice. But I said, you need a plan. And that day, Netflix jumped whatever it was, and it defied this down trough that we're having. And really what I want to talk about today is you don't want to just follow the news. If it's like there's two scary days in the stock market, you don't just go short. The whole idea is that you have a trading plan that gets you involved into trades before they happen. And what happened in my trading was I was taken out. I was long the Dow futures probably since last summer, and trade didn't, basically it worked to some degree, but it got taken out. But now what's happening is you have what's happening with natural gas. It's like I had people thinking, wow, now's a great time to buy natural gas because it's moving. And I'm thinking, well, first of all, I'm not going to tell you what to do because I'm not a registered investment advisor. But my thought is that's very scary. You don't want to buy into the news. I've been long natural gas, but let me even qualify that. I've been long natural gas several times and gotten taken out several times. This is an ETF for natural gas. And let me show you, this is the actual natural gas here. Probably got long a couple different pieces here on breakout trades, and that's what I do. And then you can also see here, I got long, and then the trade didn't work. But you know what the deal is? To have the tenacity and the perseverance to take that next signal when it comes, even if the last trade didn't work. And I took a natural gas signal. I'm not buying it now. I think it's very scary to buy. I mean, this thing almost went parabolic. And again, anything can happen when we're trading. But again, you don't want to just trade on the news. And the same analogy is, let's say, there was an article that someone forwarded to me about cattle or feeder cattle or live cattle. I don't remember which one. That it was at a 61-year low. And is it a good time to buy cattle? Or actually, he was a client. He said, did you buy cattle? I said, just look in your account. And we're long live cattle and feeder cattle. But the fact is that I'm not buying it because of the news. Actually, because it's in the news, it kind of is a detriment to me. I like things when they're not in the news and just kind of slowly moving up. You can see like this. And that goes to the next point, where I want to talk about is some of the like the bonds and like these ETFs that trade interest rates. And the fact with the interest rates is everybody was very, very pessimistic on interest rates, and they all thought it was going to go up. Everyone thought interest rates are going up. Well, again, when you trade with a system and you trade with a methodology, you have to park your opinions. And there was another piece in one of my recent videos, you can go look back about it, where the bond bears were at an extreme level. So you never want to trade with the herd. I got long all different types of interest rate vehicles, and I don't know if the trade's going to work or not work, but the idea is to follow your trading plan, even if it's contrary to what you think. Because I also was part of this, thinking that the bond interest rates are going up, and we have to have inflation and all of this. Well, nothing has to happen. The only thing that has to happen is that you have to be diligent in your trading plan and you have to follow it. It's one thing to have the trading plan, and that's what most people don't even have. And that's why I offer my services as a consultant, as a coach, and I do it two ways. One is I do it by, like a fixed price, $5,000. It's unlimited, and I'm here to help you to get your trading plan. And even more importantly is the psychology. But then I've gotten all kinds of emails from people saying, I don't have $5,000 to spend. Some of the private traders. So what I've done is I do it by an hourly basis, and you can book with me. I'm available. Actually, I'm all booked up for the next 2 weeks. But on an hourly basis, let me show you on my website. Here, one second. Go to this products. And we do hourly consulting. And again, it could be either building your trading plan. It could be building your automated algorithmic system, your system of mechanical trading. That's what I do. The other is it could be on the psychology of what it takes to be a consistent, successful trader over time. So really, to wrap this up, going back on the news and short squeezes, you don't want to just follow the news. You would have lost money following news on the bonds or the different interest rate vehicles. The idea, what you really, really want to do, if you really want to be successful in trading, and you know what? It's not easy. You're always going to have losses. You're always going to have periods that you don't make money. You're always going to have durations of trade or trading that you haven't made money, and that could be a year. And then you also have the patience to know when to step aside from, let's say, even if it's a stock market, because there's periods where it's not good to be in the stock market. If there's just periods. Either you're going to be like in a period that you're going short, either you're going to be short, which is very, very tough, or you want to be out of the market. And you have to have the patience to stay out of the market and the diligence and the strength to know when to get back in. And yes, people say you can't market time. Well, actually, I was with a family office last week, and I said, you know what? I'll tell them I'll agree to disagree. I said, you know what? Forget my opinion. Forget your opinion. Put in just technically a 200-period exponential moving average, which we did. Put in a 50-period exponential moving average. I asked them, would you be able to participate in every bull market if you're above these two lines? And clearly they kind of ate crow and they said yes. And I said, what would have happened in 2008? Would you have protected capital, which they lost? And they said yes. So there's many, many attributes of trading that you don't want to trade with fixed opinions. This is it. This is really what I want to get across to you. And whatever I can do to help you, again, I've been helped. I've had mentors that have taught me how to think. It's not buying any magical system or retirement in a box, because that doesn't really hold up in the real world. It's how to think as a successful trader, how to accept really the hardships of trading, and how to continue. Again, this is Andrew from Trend Following Mentor. I appreciate you coming, and my goal is to teach you and to guide you to become a better trader. Thank you.